Okay, good morning, everybody. Welcome to day 4 of the Festival of Startups. I'm Alex Chisnell, your host today, and I'm joined by Stepan Galaev. How are you doing today, sir?
Thank you. Thank you very well. Great to be here, Alex.
Thank you for joining us, and welcome to everybody who's attending. We've had fantastic viewing figures throughout the week. I think today is probably my favorite day, looking at the schedule we've got. Stepan, who's investment director at Dragon's Den, runs a startup consultancy as well. I've got Stuart Chapman from one of the leading venture capital firms in the UK, Draper Esprit, joining me at 12. And then at 2 p.m, we've got Piers Linney, non-executive director of the British Business Bank, former Dragon, as you'll know, and entrepreneur as well. So lots to talk about and dig into today. And then tomorrow we'll close off the first week with another 3 webinars. And then next week we've got an action-packed week for you as well. So little bits of housekeeping for everybody, just to point you in the right direction. Questions today, please. A couple of things you can use. Tab on the right-hand side of your screen, you'll see chat, live chat. So you can just type in any commentary from the chat that me and Stepan are going to be having, any questions, and I also encourage you to connect. That's what we're here for. Some of you will have connected in our virtual chat rooms beforehand. Again, feel free to post up your LinkedIn profile. I'm going to be doing that. I'm always happy to connect with everybody online after any events. We've also got the questions tab that you'll see just below the live chat tab. So I'm getting a lot of questions in there from people as well. So feel free to use that tab as well. So yeah, here we are, Thursday, and I'm down in Poole in Dorset. We'd normally be at either Olympia in London or we'd be at the NEC in Birmingham, but we are online. And Stepan, whereabouts are you?
Well, I am in the north of Europe. I am Tallinn, Estonia. I had to run away from lockdown.
I don't blame you.
I headed up during the first one in March in a 1-bedroom flat. We thought there's no chance we're having a second one, so let's run away.
And you did. You made it. You made it. And how are things like over there? We were just talking a little bit beforehand, but yeah, compared to those of us, most people here are going to be watching from the UK.
Well, so far so good. No lockdown. I think it's number 4, number 5 in terms of per capita from the bottom of the table in European Union. So that's not bad. But it's creeping up. I think another 2 weeks we might go into lockdown as well. But right. That window for me of 6 weeks of no lockdown, it gave me enough time to relax and get back to normal life, shall we say.
And you can, I'm best known for being the investment director at Dragon's Den. As I say, you also run your own startup consultancy. And you don't just work with the Dragon's Den, but you obviously, I'm assuming, work with lots of other high net worth individuals, angels, private equity. And can you operate? Have you found you can operate pretty much anywhere in the world? You can operate your business, or has it come with different challenges?
I was worried as well in March, April that, what's going to happen with our business? Because venture capital is all about the people. Yeah. So you have to meet, you have to get that chemistry right, and the only way to do it is face to face, a walk in the park or a meal. Yeah. Whether it's a new investor or a founder of the company. And I was worried, oh gosh, how are we going to do that over the Zoom or Skype or AirMeet? Surprise, surprise, I think it was in May, we've actually closed our first deal. It was quite a large one. It was over £1 million, and there wasn't a single face-to-face meeting. Not from the investors with the founders, from our side with the founders. It was all online, and that gave me the comfort. Actually, wow! If we can do that fully online, do we ever have to spend money on fancy hotels and restaurants again?
Well, this is the question, isn't it? Indeed, and flights and all of that kind of stuff. Yeah.
So I think so far so good, really. There's no impact. We see growth, in fact, and angels are very active, looking for exciting ventures that actually benefit from the current situation, if anything. So far so good.
So that's good. And I was going to ask you actually one of the questions, but let's ask that now. Actually, how have you seen the landscape for investment, because I was chatting, and I've got him again Monday, which I'm excited about. Magnus Grimmeland from Antler, early stage VC and startup generator. And yeah, interested to know your thoughts then. So I spoke to Magnus about 6 months ago, and he told me his thoughts then, and we'll get his updates, because they've got, I think, 8 centers around the world now where they've got different cohorts going through, and quite a substantial portfolio. But yeah, how have you seen the last 6, 7, 8, 9 months now in the UK, and how things have changed during that period of time when it comes to investment?
Unfortunately for founders, there has been a correction in valuations. I think from our side, that's the biggest benefit.
Yeah.
I think we would manage to negotiate 30-40% discount at the moment on the valuations. But I think at the same time, if the numbers are right, if the founders, great team, great startup, there is something about closing the deals quicker now. Again, because of that digital mentality, it's normal to do a pitch online, and people make decisions quicker this way as well. So yes, you might take a hit on the valuations, but you might get to the finishing line quicker.
Yeah. Okay.
And especially at the moment when cash could be so critical, and the speed to that cash is more important than, yeah, we might take a 10% hit. Fair enough, but at least we're growing. We're capitalizing on the opportunity. That would be, I think, the key takeaway I found in the last couple of months since March.
Yeah.
There's a big wave of companies trying to take the advantage of the situation as well, which we see coming through the door. But how, for the lack of a better word, how seasonal are they? We don't know, because comes summer, we'll know things going back to normal, more or less.
Yeah.
And if your product is purely for the current environment, what's going to happen after that? And that short-term thinking, somewhere where we try to shy away from. And I would always challenge the founders with the long-term mentality.
Yeah.
Think 5 years, think 10 years ahead. What's going to happen, and not, oh, let me take this advantage now for the next 3 months, make $1 million, and then go and live off the island somewhere.
Yeah, exactly.
Not a good pitch. These are the 2 main drivers we see: it's the valuation, and then that a bit of a short-term view.
And we've seen, the record numbers of businesses being started up in the UK, and I'm sure that pattern's probably been replicated throughout the world. Do you see investment opportunities increasing as well at the same time as the volume in deal flow gone up? Yeah.
Definitely. Look, I cannot applaud enough to the EIS and SAS investment schemes and the initiative that the British government takes there. It's second to none, best in the world, definitely, and that was driving the whole growth and entrepreneurship scene. I just hope there will not be any corrections to that. And you can see year on year it continues to grow, the entrepreneurship activity.
Yeah.
Very hopeful it will stay the same coming 21 and 22. So we see more deals, better quality of deals. I think if I may, quality of entrepreneurs is also getting a lot better. If we can put that.
Interesting, isn't it? Yeah.
Yeah, people, because it's becoming. Maybe 5 years ago, it was hip and cool.
Yeah.
Right. At the moment, it's becoming a bit more institutionalized, where people understand it's no longer hip and cool. You have to have the substance.
Yeah.
So the companies and the founders we see, they already come with that mindset. We're not going to just do the marketing pitch here. We actually come with the substance, with experience, with the know-how, with traction, and that changed a lot.
Yeah.
At least in our world, we are quite early. We are just post-revenue, seed rounds. The quality definitely improved.
Yeah, I think like the likes of Gary Vaynerchuk have got a lot to answer for when he first brought his books out, and it was seen as hip and cool to be an entrepreneur instead of getting a job. But yeah, like you say, we're so many years further down the line now, so that's interesting. And maybe might be a good point to touch on again. You mentioned there like the 2 different schemes. for those who are unfamiliar with that, could you give a really brief overview? Because you say you think it's like the best in the world from the UK, and that's probably why we do so well in that space.
Yeah. Well, if we take the volume of deals and I think the cash, probably 70% of all venture activity is in London, in Europe. I think the key driver is the investment schemes for the early stage, and then of course the access to capital on the later stage that drives it. The earlier one, small enterprise investment scheme, the SCIS, this is where you can invest 150,000 per annum, and you offset 50% of the tax of your income tax. Effectively, it's a 50% discount on your investment.
Yeah.
What else can you ask for? and then if you're lucky, if you got the right one, on the way out, when you sell, you pay no capital gains tax.
Yeah.
That's phenomenal.
It is. Yeah,
the enterprise investment scheme is for a bit more advanced companies. There you can invest £1 million per annum and you offset 30%. Again, no capital gains on the way out. There's no other country in the world that does something similar. There's some sort of Delaware in America where you have to the German government trying to give you cash back physically to the company. Mm-hmm. I think it's more of a cash problem for them rather than a driver for the venture activity. A few things going on in Israel, and of course Estonia is great. It's almost like a tax haven to start a company.
Really? Is that what? And do you think that's part of? Because I know Estonia is really, technologically advanced, and some of the companies that have come out, I think TransferWise, one of them, Skype maybe even as well.
Yeah, that's right. That's right.
Yeah.
The Estonian model is not to incentivize the individual angels to invest, but give the corporate structure where you don't pay any taxes as a corporate.
Okay.
And provided you keep the money in the company, you never pay any tax. You can just grow and grow and grow and use that money to fuel the growth. But these are the only 4 or 5 in the world. And I think exactly the driver for the UK and exactly the driver for Estonia is the right infrastructure, the right setup. And I'm just so hopeful it will continue to be the case in the UK. We need to have something to compete with the European Union.
Indeed, we do, and that's becoming more and more important. And for you, look, obviously, quite a lot of the questions I've been asked in the lead up to this from people sending messages into us is, how do you come in the position to be looking after investments for Dragon's Den? What's the story there? How did that come about?
I just have to make a small correction. It's investment director for Dragon's Den, the title. However, I'm not employed by the BBC. I'm not employed by the Dragon's Den. It's an independent vehicle that I'm the owner of. Yeah. And it all started 6 years ago with Nick Jenkins. He was a Dragon at the time. He graduated from the same school, Cranfield University.
Okay.
And I was doing my MBA at the time, while Nick was a Dragon in his first series. So he reached out to the university, and I think he had so many investments on the go. He realized that, oh gosh, I cannot manage it anymore. I need somebody to help me out. And he reached out to the university and said, well, could you please have a look for some of the MBA and MSc students who might have some experience or looking for that type of role. And I was one of the 5 students that Cranfield School of Management selected to put forward for an interview with Nick. I don't know what actually Nick saw in me, shall we say, because I had no previous banking experience or private equity experience. I was a dental technician doing an MBA, trying to jump into that industry. However, I was taking some risks privately and doing small angel investments to Estonia. Okay. That's all experience I had. And I think I was the lucky one. Nick chose me. He gave me the opportunity. We worked on 2 seasons for Dragon's Den together. And it was not me working, it was me learning and Nick teaching me how to do it. So I'm infinitely grateful to him for taking someone with no experience and training from the due diligence to the exit, because we had the full supply chain, if you like. So he taught me things from how do you build up an Excel and a model, to how do you read a shareholders agreement and articles, and then how do you negotiate an exit at the end of the process. That was the best school you could go to.
I bet. Yeah.
And after 2 years and 2 seasons, Nick, obviously he was retiring, shall we say, from Dragon's Den.
Yeah.
And I thought, well, what do? Do I go and work for another family office, shall we say, or a VC, or do I try and start something of my own? I decided to take a risk. Since I'm in venture capital, you have to take a risk.
Indeed.
And I've decided to start my own corporate finance. Now we're fully regulated, and what we do is helping that angel and super angels to invest, because there's a threshold where you as an individual, you just don't have the time to manage your own angel portfolio. I think that's about 5-6 startups, and after that you would have to either do you build your own family office that will manage all this, or do you outsource it? And the outsourcing bit is exactly what we do. We would run the whole thing for
I
you.
see. And people probably know Nick best from Moonpig, from setting up.
Of course.
Yeah.
Yes.
Yeah. I'm sure we've probably got more than a few mutual connections then. I know like Nick Coleman from Snaffling Pig was one of Nick's investments, and I'm sure there's many others if I had a little look.
Well, I was the person who visited the warehouse, did the due diligence with guys. Yes.
I love Nick. I've hosted him for numerous events all over the country. He's a great guy.
They're great founders. We had no doubts when we were working on the due diligence and deciding with Nick Jenkins that we should support the company, and Nick invested without second thoughts. I'm sure they'll do really well.
Yeah, and I know they did a successful crowdfunding round probably about 12 months ago now. Yeah, I think it was September last year actually, if my memory serves me right, because I invested.
Same here, guilty.
Guilty as well. Very good. And so again, some of the questions I've been asked for you is what does a typical day look like for you? And it's probably a little bit different now than it was 12 months ago, maybe. I don't know. Maybe just how it's structured, but maybe you could share that with us. People might find that quite interesting.
I have to be honest, I'm terrible at organization.
Are you?
Yeah. I think I'm a classic actually entrepreneur, a bit of all over the place. That might come across,
no.
But truth. So it's difficult for me to organize the day, and therefore it's very random. It could be a meeting in the morning, and then with a potential investee company, and then a meeting in the afternoon with a potential investor, and then comes late evening. I start replying emails, or all of that moves around. Where I think a better way of doing things, if you have a structure, you do your emails in the morning, then you have a one hour slot for meeting, then you have a lunch.
Yeah.
I think first 3 years as I was building my business, it's fair to say I was probably working 7 days a week non-stop, forgot to have my lunch and dinner. It was a mess.
With that, yeah.
but that's first couple of years, and then slowly you get into a stage where there's a team, there's a support around you, and it becomes a little bit easier. But today it's mostly, I would say 1/3 of my time is supporting the current portfolio. And the current startups, the current angels and their investments. And that could range from how do we launch a new website, how do we find a new logistics warehouse, how do we launch a product on Amazon, to digital marketing, because we have experts who know those facets, and we would add that value. The third would be business development. So going for pitches and meeting with the founders and meeting with potential clients. And third of the time will be emails, unfortunately, which I hate.
No, I'm the same as you, and I'm desperately trying to I think the word is like batch those tasks. Like you, I will literally go, half a day I'm going to spend doing this, and then this part of the day I'm going to be doing all those tasks. So no, I get it. I'm getting lots of questions, which is great, and we will come to those at the end, so please keep those questions coming in on the questions tab there. That's brilliant. And can you give us any insights into what angel investors look for in a potential investment? Can you share given your experience over the years, maybe share some of those for our audience that are listening and watching today?
Of course. I would put 3 key pillars of venture investing. One is people, the deal itself, and the third is added value. The people is 90% of success. So you have to make sure that the founders, you have a chemistry with them. I think that's key. Then having previous experience, previous ventures, that's also key. And how the team is interconnected. 3-4 individuals, what's the chemistry between them? How do they work together? Because human beings, we tend to be quite irrational. And the biggest risk if the founders will fall out.
Yeah.
How do you judge it? How do you make a guess? It's a bit random. I'm sure there's science behind it, but I don't know. But that to me, and that chemistry, the people, is the key. And also, ideally, if they have different backgrounds, so one perhaps accounting and finance, another person is in marketing, and first the founder, she might be the sales, the driver force.
Yeah,
That's a good. We would avoid one-man bands, full stop. If it's a one founder, we would just not invest.
Would you? Okay, so that's really interesting. Okay.
Yeah. So that's the thing. 2 is okay. 3 is ideal and more, because 3 is the balance. You have 2 people against 1, just in case if there's an argument. You can always navigate and perhaps convince the other person or agree to disagree. That's fine.
Yeah.
But then 2, if they fall out, it's almost as having one founder.
Yeah.
And especially if they have a 50-50 share split, that is a mess. Then the second one is the deal. You would always look for the right valuation. Let's be honest. At the end of the day, money is, to some extent, is the driver of venture capital. And you cannot always burn cash. You can always lose money on the deals. Sometimes you have to win. A deal would be, what's the valuation? What is the equity split? How much are we getting in terms of percentage? What are the rights coming along with that percentage? Can we appoint a director? Can we have control? Can we have some consent items so that the founder will not do something naughty? And that's the deal itself. And then, is it convertible? Is it a equity piece? All of that has to be blended in and analyzed. Again, I will mention that we don't like convertibles and safes. Right. That's a big no-no. And I think Y Combinator from America, they spoiled it all for every angel out there. Yeah. Because from the angel point of view, a safe gives you nothing at all. There's no rights, no protection. It's a promise that one day, somewhere in the future, maybe in 20 years, I will have a priced round.
Yeah.
And you might get some equity. Mm-hmm. Nothing stopping founders from ever building their company on the safes and never converting to equity.
Yeah.
And then maybe making an offer to buy everybody out. I think it's so unfair to the angels, and a lot of the angel investors trying to, slowly shy away from it and say, guys, we're doing equity only. That would be the deal part. And the third is added value. If angel investor has a foresight where he or she can add value, make introductions, strategic navigation, that's one thing. If on the other side there isn't a way to add value to the startup, we would not get involved. Then what's the point? Being a silent investor, you're not an angel investor, then you're a bank.
Yeah.
Just give them the money and that's it. Mm-hmm. And if you cannot add that value, then perhaps you should shy away from the deal. because that's the key. That's angel investment. That's all about you. But then you drive the startup, you drive the venture together. And we would only pick those industries, those companies, countries where we know we have a added value piece covered through maybe network, through connections, portfolio syndication, et cetera, et cetera.
And how key is network for you? Do you think is it people? It's obviously a large part of it, but that added value, the network must be massive as well. The power of that network.
Definitely. I remember one of our lecturers in Cranfield. He told us this thing: business is by the people for the people.
Yeah,
I think enough said.
Enough said, done.
It's all about the people whom you know, and how do you put those connections together?
Yeah,
it helps. It helps to know the right person for the right time. It could be a senior manager in somewhere within the supply chain for the product, or it could be a buyer of the product in a large retail, and that's pushing the business forward.
Yeah, and you still see, people do fall out. I was interviewing Gagan Biani, one of the founders of Udemy, and they, kicked him out of his own company. It happens, don't you? We all kind of see, and that's like one of the big headline ones, given that I think it's $1 billion business now, Udemy, which still has significant equity in, of course, but it does happen, and it probably happens more often than people see. They just see those headline names, don't they? But it probably happens more often. People grow up, don't they? People change, life experiences happen.
It happens a lot. We without disclosing secrets and names, we have situations like that where founders all of a sudden decided, oh, I'm going to live in the south coast of France. Thank you very much. Goodbye. I had enough. I think I've done my bit.
Yeah.
What do you do then? You invest in people and you trust them to run the company. And if the founding team goes, well, you inherit a skeleton. Do you appoint a new CEO? Do you find, or you exit yourself? Do you sell it to someone? It's a mess. Of course, we try to protect ourselves for at least for the duration of the first 3 years. And there's lock-in of the founders. There's a vesting period where if you leave, you will have to give and sacrifice some of your shares. And I think that's fair. I would advise to the founders, get the best lawyer you can afford.
I was about to say to you, advice would be literally at the start, wouldn't it? To literally get a watertight agreement, even though we're all friends, we're all mates, we grew up together, we went to university together, it'll be fine. And then shit happens.
4 years down the line, it's a big company. The CEO, the founder might not be the right person for the role. And how do you tell them that you'll have to step down? We love you, you're the greatest, but there's someone else who will actually drive this company much faster and better.
Yeah.
It's a difficult conversation. Very few people, especially founders, might be happy with that.
Yeah. And what's some of the other classic mistakes that you could maybe, that being probably maybe the biggest one, founders not doing that, but other classic mistakes that you've seen that entrepreneurs could avoid making if they're, because I can see we've got loads of questions and people at different stages of the journey, but those who are literally, a startup in the process of starting up, even what kind of, and they're looking, they're putting their investment deck together, they're looking to raise at some point. Maybe we can give us a couple of things to avoid.
There's a few no-nos that for us are straight in the bin situation. Avoid buzzwords, one of them. If it's a pitch in investment deck with AI, deep tech, CBD, big data in it, one of those, or a combination of all.
A combination of all, yeah.
Straight in the bin, unfortunately. Unless you are a PhD from a top university in the world in the subject, we will not take you seriously. These are just buzzwords where very small percentage of the population understands what they talk about. So to us, it's a message: you are not taking this seriously. I'm sorry, we are not going to read and spend our time on the due diligence. Avoid buzzwords. Avoid comparing a startup with a large known institution. So we are the next Bolt, we are the next TransferWise, we are the next Uber, Facebook, you name it. It took decades for these companies to get where they are. And comparing yourself with one of those uber successful companies that took 40 years to build, it's a little bit naive. However, if you compare yourself to the direct competition, more or less on the same level, that is perfect. And we see less of that, actually. They say we have no competition, but we are the next Uber.
Honestly, I used to see so much of that when I was with Virgin Startup for 5 years. Yeah, we're the next Airbnb. We're the Airbnb of this industry. Yeah. You're like, no, you're not.
no. You are competing with another 10 folks all over the world who are trying to do the same, and compare yourself to them and tell us, how are you different from them? And that's an ideal scenario.
Yeah, that's good advice.
So a no is we don't have any competition. I always say that even God has competition.
I like that.
So please don't tell us you don't have any competition. Then I've mentioned this one-man band. Trying to build a company, it's a very long journey. And a successful company is even longer journey, 10, 20, 30 years. You are not going to do it alone. And surrounding yourself with the right people, the right wisdom, skill set from the very early days is key. And maybe have that mindset, okay, I will have to share some of my equity, but the more you share, the better, the quicker you grow. Actually, don't hold on to it. Don't feel that, oh, it's my baby, I'm going to have 99% until year 10. No, have an option pool, incentivize key people so that you can build a great team of forward thinkers. Yep, we're all in this together for the next 10 years or longer.
Yeah.
When you construct your pitch, your deck, and thinking about a strategy, always think the team and who are sending a deck with one member. No.
Yeah.
I think these are the key ones I would just pop into my head.
Yeah, no, that's really helpful. And I always, I was with Virgin Atlantic for many years, and then with Virgin Startup. And I remember going to the Battleship building in London, Waterloo, where they're based, and just going into the offices there and seeing on the wall, and it was something like 225 Virgin companies. And
wow.
The one thing that I one of many things that I took away from having Richard Branson as a boss was literally seeing him start up a brand new company and grab somebody who's already doing that in that industry, maybe one level below CEO, whatever, and then parachuting them into giving them a promotion, but then incentivizing them to actually make that business a success. Giving them a small team of people around them to help them, the necessary support and the funds, etc. But more than that, it's like you say, incentivizing them to do it in one-man bands. It's just such a long journey, isn't it, for people to do.
And I think that's the success of Virgin and Richard Branson. That's the mentality, isn't it? He would build that team together, incentivize people, give them the equity, and then trust them, guys, girls.
Yeah.
Know what you're doing, go.
Yeah.
But he would understand that very, very clearly. Great man. So someone
and people used to always, say, oh, I need to leave to make some serious money. Virgin never paid good money, but he was like, I've created, more millionaires who through the shares that they've been incentivized to build those companies than, many entrepreneurs have ever made. So it's an interesting model. So, as I say, a bunch of questions coming that I will get to, so hold on, folks. For you then, I believe you've got startup consultancy as well. What does that involve? Is that earlier stage, and what your ideal customer look like for kind of both sides of the coin with how you operate?
It's the smaller part of our business, the startup consultancy. I would say 80-90% really is the angels and corporate finance for the angels.
Okay.
At the same time, we've built this network of consultants, advisors, full-time team where they cover most of the facets for a startup. Operational consultants, logistics, digital marketing, branding, accounting, lawyers, you name it. So we thought, why don't we offer that expertise to someone as well, from the founder side? If it's early stage company, they post revenue, they're growing, and they might have a specific question about, or even they want to negotiate a deal with an investor. Yes, you can go to a lawyer, and a lawyer will do a great job, a corporate lawyer. However, they might not have the exact expertise of dealing with hundreds and hundreds of startups and closing tens and tens of deals for early stage companies. So our in-house lawyer can do that. It's basically almost like consultancy for startups. It could be digital marketing for FMCG company.
Yeah.
Yes, there are a lot of large providers of digital marketing. They're great agencies. However, they might be very expensive for a startup. They will need a couple of £1,000 retainer, and then there's a percentage of this marketing spend, and they might not take you if your digital spend less than 50,000. So where do you go? Where do you find the professionals?
Yeah.
Where we have 2 members of the team who do that exactly for early stage companies. And then if you want to, shall we say, have some of their time, please, that's not a problem. I would say that the ideal client, if it's an angel, someone who has reached a stage in their life where they want to give back and they want to educate, support the young, and money is no longer a subject for them.
Right.
That's an ideal client. If you start a relationship with angel investing from the mindset, oh, I'm going to make a lot of money, then you're not our client. It's not about the money. On the startup side, an ideal client would be a growth stage. We have the product, we have the service, we've done, I don't know, £500,000 sales. Yes, we might be burning cash, but we see where we're going, and they need that extra push within any of those facets of the business where we can help. And it's all listed on the website. People can have a look. Our team, the services we provide. So these would be the ideal clients.
And it sounds like that kind of, with the consultancy, almost like that kind of hub spoke model where somebody's coming in for this, but you can also, the added value is literally, we can also help you with this and this, because as you say, and I've seen it so many times, when somebody, coming in for really early stage with Virgin, they've got some of their own money with Virgin Startup, but then they're looking to leverage some cheap money from the government as well. But they're then spending a ridiculous percentage of that money by going to a big agency.
Yes.
And they're probably paying somebody £18,000 who's straight out of university to actually do that work for you. But then the markup is, kind of astronomical.
Exactly, because you have to have a fancy office in the central of London to pay for.
Exactly.
etc., etc. So it all adds up. I'm not saying that the big four in accountancy would do a bad job for a startup. Perhaps they're just not geared up to deal with a startup.
Yeah.
That would be my argument. So if you go to professionals who specialize in accounting for younger companies, you'll get much better service, really. Accounts will still be accounts. You still can file them to the company's house, to the HMRC, but maybe with specialized, it'll be quicker, better, cheaper. That would be my argument. And same with the lawyers as well.
Yeah.
Same with digital marketeers, etc., etc. So you're absolutely right. Getting that money raised is the hardest thing. And then if you burn it that fast on big brands, big names supporting you, and not achieve much, terrible mistake. You have to be very smart with the money you raise and choosing the right consultants and advisors. We've seen it a lot of times, unfortunately.
I bet. Right, I'm gonna get to some of the questions we've had in from our audience. So Samantha from FindingStartups.com said, "How do you look for startups? What channels do you use?" And has that changed? I suppose I'd add to that over the last year. As well, have you had to look a little bit harder, or maybe from our earlier conversation, they're approaching you instead?
At the beginning of our journey, we had to scout. We had to go out. So the classic scouting, angel networks, pitch events, accelerators, incubators, etc., etc. At the moment, we are quite fortunate where it's more inbound. and it's introductions from our investor base, from investee base, LinkedIn. It's a really big one. And once you have that critical mass of network, shall we say, then it just grows organically. It takes time to get to the network, and I would say 3 more years. If you're in a VC space, don't expect miracles to happen quickly. It's really a long-term game.
Yeah.
In terms of opportunities, if I were to say, where do the best ones come from?
Yeah.
And there's never a scenario or never a place where actually they do. It could be a complete random friend somewhere from a startup from Portugal. We said, "Oh, Stefan, I've been on this event and I've met with this chap or this lady. Here we go. Have a look at the deck." Just randomly, and wow, you think this is great. Or it could be a professional VC who will send you the deck and it's terrible.
Right. Yeah. Interesting. Yeah. So there's no science behind it still.
No, I think there's no science. It's just network, and as you go out there, speak to as many people as you can.
Yeah.
And be on the radar.
Great. Thanks for that. And Edwin, Lad Director, Mr. Lad Media says, how many investments back do not work out, and what seem to be the pitfalls for these investments? And I know this probably relates to a few questions we've had leading up to this from people saying, different percentages, but saying how many of the investments on Dragon's Den, for example, that look like they've been funded, then go through the due diligence process, and it can take months and months and months, obviously. And then don't actually go through for a variety of reasons. So yeah, maybe you can elaborate on that a little bit. That's a good question.
Of course. With the Dragon's Den, let me try to be a United Nations diplomat now.
Yeah, so I knew you'd have to be.
There is a high percentage of companies that do not pass due diligence. And the reasons could be we uncover something in the process of due diligence that the investor is not comfortable with. Could be previous failures that the founder never mentioned about. Unfortunately, it could be a criminal record. It could be the statements made during the pitch in the den that goes on the TV. They are completely false. Well, an example, last year we've done £1 million revenue, and you look at the actual accounts, it was 100,000.
Yeah.
How to rebuild the relationship from that lie, it's almost impossible.
Yeah.
On the other side, it could be from the founders that their investment doesn't go through. A lot of the folks will have a sleep on it after the den, and a week later they realize, oh my God, what have I done? I've given away 10% of my company for £2.
Yeah. Yeah.
Not good thinking. What was I doing? And they would try to renegotiate, or they would just say, I'm sorry, we can't agree to that. However, a handshake is a handshake, and for the Dragons it would not be negotiable. Mm-hmm. That's another big reason for parting ways. In terms of failures from outside of Dragon's Den, and apologies, we have a bit of a construction going on for background noise. Then we were very successful so far. In 6 years, over 25 companies founded. We had 2 writes-off, 2 skeletons, and 4 exits already. It's luck. It's nothing else. It's not genius. It's pure. The usual statistics you would write off in 5 years' time, 50-60%. Then you have 20% of skeletons, and then 20% will have sort of an exit, and out of those, 5% will be stellar performance. Yeah. I think that's the statistics I could share.
Yeah, no, that's good. Kev Flanagan says, any advice you could give to raising pre-launch capital for a new SaaS project?
Pre-launch, that's pre-revenue, pre-product. That's difficult.
Yeah.
Assemble the best team you can. That's the only advice. If you have 4 people with experience building something before, knowledge in the industry, and that collective of minds pitching, you have a much higher success rate than if it's just you with a great idea.
Yeah, good. Another question: how do you see the impact investment scene developing, and what criteria do startups need to meet to be eligible, i.e., sustainable business models?
I am a great believer of impact investing. And impact could be making sure that the right industries in terms of eco-friendly or helping the environment or helping the certain populations around the world helping. It's all great initiatives, and I'm a great believer that's the way forward. From the founder's side, don't fall into the situation where you're overselling the idea that you're actually making something great and a greater cause, without focusing on the actual business itself. So I think fundamentally, number one, it should be, we are trying to build this business, which will be a self-sustainable vehicle to create jobs, create value. But at the same time, we are doing great for the local community.
Yeah.
And it shouldn't be the case where we want to be great for the local community. This is the idea. It might not work, but we want to be great for the local community. Don't do that mistake.
Yeah, good. Paul Smith, head of development at Biomation, says, I note Stefan's comments on founders. We're a startup but have taken over from all but one of the original founders, 3 founders. The current teams are not really founders, but a team with a skill set to commercialize. How do investors see this? Interesting question.
I think that's fine. If everyone is incentivized, if they have an option pool, and you know that they're in for the long journey, and you have a very good engagement contract or a director contract that's bulletproof, that's fine. If you don't have one, well, as an investor, we'll probably insist on signing one.
Yeah.
Then it's fine.
Thanks. Emma Berwick, MD at Hornby Chapman NED, says, do early stage businesses that work with government/public sector make the investment cut? Asking due to decarbonisation/ESG agenda that will drive economic recovery in the UK. Good question. Thank you, Emma.
Of course they do. Working with the government is great because it's one client that could make the biggest impact to your bottom line, top line. On the other side, we all have to be very clear about that winning a contract with the government is a 2-year job. And depending on where you are on that journey, that will drive the decision for the investor. If you're just about to sign the final document with the government and you've spent 2 years negotiating contracts, technology, one story. If you're saying, well, there is this program with the government that I want to explore and give me £2 million to explore it, completely different risk profile.
Yeah.
But we would always look at companies that cater to both government and non-government, definitely.
Yeah, Emma says, thanks, Stefan. Nearly there with the government framework. Kieran Kang, marketing at Parabo, says, where can I find angel investors that want to also mentor? I found a manufacturing company that's offered me $100,000 to start an e-commerce business, but wants me to put in the same amount of money myself, which I don't have. And I'm sure this is a common theme. Any recommendations at all on where to look?
I'd just love to make a comment about the founders not having the money. I think the investors, the real professional investors, the angels, the good folks, shall we say, they understand that dilemma. They really know not all of us have 100,000 stashed away to risk on a new venture. And the sweat that you're putting into is your cost, is your opportunity, it's your time. And they understand that. And I know there's even a drive for a salary that is reasonable, market rate salary to the founders. You don't want to pay somebody £18,000 and ask them to do a CEO job. That would be flawed. It really has to be something more or less of a market rate. Sorry, Alex, remind me of the second part of the question.
Yes, said she found a manufacturing company that's offered her $100,000 to start an e-commerce, but wants me to put the same amount of money into. So that also want to mentor as well, and that goes kind of hand in hand with some angel investors compared to like a VC, for example.
Angels would always add more value and will be a lot more hands-on if it's a super angel he or she really involved. A VC, more about the money, less about the added value in my experience. This is very general. Of course, there are VCs that specialize in the industry, that have great contacts, they can really help you. But if it's a generic VC, it's a little bit more about how do we diversify the portfolio, have a lot of companies spread out risks. That's what really drives their mentality. With an angel, it should be, I'm risking my capital. How can I help? How can I push this forward?
Yeah, great, thank you. A few more questions we've got time for, I think. I got literally loads of questions, which is great. Edwin says, when meeting an investor, how should we approach and pitch to an investor? What's the best way to structure it? We touched on that right at the beginning, but maybe we can just kind of like reiterate that, so people jumping on late today maybe as well. So yeah, we're meeting an investor. How should we approach and pitch to an investor? What's the best way to structure it? So maybe, yeah, just reiterate the structure would be great. Thanks.
Well, good luck. Well done. You've already have a meeting. Fantastic. If you are just before getting that meeting or trying to set up meetings, then of course just have the deck ready. 10-pager is fine. Again, no buzzwords, no Ubers, Facebooks, etc., and you'll be fine. If you're pitching, how do you structure that kind of face-to-face or digital pitch? I always say that being humble, being honest and genuine will reap 10 times more benefits than being overconfident and oversalesing.
Yeah.
It's just from experience is what we see. It's almost like a reverse correlation. And also, if you are very open about the risks, the competition, and the probability of failure, you say, I have this idea, I think it could work. There's very large number of competitors doing this. Here they are. We're different in this way, and we think with that team we might have a great chance. That's one pitch. Another one, we are building the next Facebook, and we are the best in the world in sales, and we've done £10 revenue last month, and we're going to do 3 million tomorrow.
Yeah,
it's a different mentality. I think the more the realistic, the humble you are, the better.
You've seen the same one as me. I've seen that one.
Yeah.
I've definitely read that one. Brilliant. Chris Wood has put a bunch of comments and questions, so I'll just read through them and he can pull out the question at the end. So he's the CEO of Fast Film Administration. He says, you mentioned the importance of SEIS and EIS, but we in the film industry are finding that HMRC are going out of their way to turn down applications for compliance certificates on the basis that they don't see a large infrastructure with lots of PAYE. This approach simply doesn't work in the current climate, and the funds are needed for film production, not large unusable office operations. Is there a particular avenue that you would use to deal with issues which HMRC are throwing up at the moment? Pretty specialized, but...
Indeed. Honestly, we have a bit of interest in media assets. If it's a great production company that has had previous experience, I think at the moment it's in fact great time to be in that industry, because you have the Netflix, Amazon alike who are consuming IP like there's no tomorrow.
Yeah.
If it's a great product, they will buy it. They will fund it as well, to a degree. And if you are in a situation where you have a contract with one of these folks and they saying, well, once you produce it, we will pay you the money that much, come to us, we will fund it, because we know it's no risk. These guys are paying for everything at the moment. If that's not the case, and you're trying to raise the money with the government incentives for film, I'm afraid there's not much I can help in terms of advice. I just don't know. It's a very, very, very niche industry, specialized. I know before EIS was working for film quite well, At the moment, yes, the government, I think they're quite stringent on that. I would do the following: try to get some form of contract with one of the big digital channels for your series or your film or your short movie, and then it'll be 10 times easier to raise funds.
Yeah. Nice. Thank you. Okay, I've got the last couple of questions here that I'll read out. Astrid D says, how can a solo founder have the team build up done when bootstrapping in the start phase is key? Is earmarking the team members to onboard after investment conducive for angels? Thank you, Astrid.
It's the same for ourselves. How do you find the best partner for your venture capital fund? There's no easy way, there's no quick way. I think it's about communication, and you extend that process for as long as possible. Don't make a decision after 2 meetings for half an hour each. Yeah. Extend it for a couple of months. Have a fight, have a drink. If you consume alcohol, have a run, have a dance, have a walk in the park, whatever is allowed in the current situation with COVID. And then you make a decision. The longer, the better. That's what I really loved about the MBA experience. You are submerged so closely in a closed room, especially in Cranfield, which is a village in the middle of nowhere. With those 50, 100 people, you'll be the best friend for life because you had 1 year together, shoulder to shoulder, 9 till 9 every day, trying to get the next Excel model out. Yeah. So if you're looking for that founder, spend as much time as possible, communicate.
Mm. What do you think about this one? And I know the answer, but I'm going to ask it to you anyway. That somebody I know that's raising a lot of money, and the directors have earmarked salaries of 150,000 each, and then they've now had an offer of more investment, so they've upped the salaries each to £250,000 a year.
Wow! Can I join them?
I want in.
It's a tough one. If it's a very large multi-million company raising 50 million, and you need that caliber of people, and the market rate is that much, fair enough.
Yeah.
We can throw that in, and let's see what the VCs will say and private equity will say. That's naughty. You might have some friction, and do you want to spoil a relationship with people who will back you? And I don't know.
Yeah, no, interesting.
Cheeky one,
exactly. Okay, we're so many questions. This is like the most questions we've had all week is this session. So really interesting. So let's have a quick look. So wow, I've got loads coming in. We do need to round up now, guys, but I'll just throw these at you for a quick one. Justin Smith, CEO, says, what are your top 3 areas of interest with regards to your investment focus? That's a great question. Prop tech, fintech, etc., etc.
Honest answer, we don't have one. We have the ones we don't look at, and that will be anything to do with buzzwords. And if I would compress our strategy, it has to be scalable. It has to be diversified team, and it has to be with identified routes to market and channels to market, and identified depth of those channels. I think that's it. If for us, it's a winning recipe. If it's an FMCG product, digital product, if it's a tech, it doesn't matter. Provided it's scalable, you know how to scale, you know how much it will cost you to scale, and you have a great team, let's risk it.
Yeah, nice.
If it's an AI deep tech CBD product, we will shy away.
That is the next Airbnb of.
Exactly.
Yeah. Brilliant. Last one, is a comment. Kev Flanagan says, thanks, Stepan, for answering my pre-revenue question. That's what I've done, build the team. So would you look at the pitch deck for me?
Okay, it's a deal.
I love it. Brilliant. There we go. And the best way for people to connect with you, get in touch, would be what?
Email hello@galaev.com. Please feel free to reach out, and we'll try to do our best to get back to you as soon as possible. I'll be honest, we would shy away from pre-revenue, pre-product, pre-service decks. Guys, honest answer. And if you happen to be a super angel with 50 million lying around, please reach out as well.
Yeah, okay. And that was hello@galaev.com. I'm just typing it into.
Yeah.
Right. Okay. Last question goes to Edwin, lads. Just because we've got that ties in rather nicely, because I'm speaking to Sabrina Stocker, who I think was the second youngest finalist on The Apprentice. Edwin says, "Do you watch The Apprentice, and what do you think of it?"
I did watch it before. Haven't had the time recently, but I think it's a great program. If anything that goes on the primetime TV to promote entrepreneurship and that competitive mindset, I think it's a great initiative. Really does miracles for the economy, for the government.
Yeah, good comments. Yeah, and I'm chatting to Sabrina tomorrow at 10 a.m. You can join us. That's the opening session tomorrow, everybody. So that led in nicely, Ed. You must have been reading my mind. So brilliant. Well, look, we could literally keep going because the questions are still coming in, but we've got to go. And I really appreciate your time. It's clearly a super popular subject to chat about. So yeah, thank you once again for your time. Much appreciated.
Really thank you, Alex. Thank you, everyone.
And just to direct everybody, we will have more virtual networking, connecting from 11:30, and then I'm going to be speaking to Stuart Chapman. Stuart is the VC Fund Director at Draper Esprit. We're going to be talking what is venture capital, when is it right for my business, how does it work, what do early stage investors look for, etc., etc. So get your questions ready for Stuart in the meantime. And then after that, at 2 p.m. today, we've got Piers Linney, a former investor on Dragon's Den and still an entrepreneur and non-executive director of the British Business Bank. So join us for both of those sessions. Once again, thank you, and take it easy, everybody. Stay safe out there. Bye-bye.
Cheers. Bye.